Hey guys, and welcome back to another video, and today I figured I'd make a quick video for you guys about a day that a lot of us are probably not enjoying. We're seeing a lot of red all across the market, and we're seeing green in all the wrong places, like the volatility index. So in today's video, I figured I'd cover why I believe the market might be dropping, as well as 3 stocks that I believe that you should buy when you have this opportunity to buy them at a discount. And I think most of my long-term subscribers would say I have a pretty good track record with picking stocks. So for you newbies, make sure you listen in all the way through the end of the video. Now I think this little crash or this little correction in the market has been a long time coming. There's been a whole bunch of factors that have been building up and creating a lot of fear within the market that's really been disregarded, and I think it's starting to come out right now. And one of those things is the extreme amount of money that's being printed. This is something that's been ignored, but needs to be focused on at some point. You can see that in 2021, the Fed is projected to allow an extreme amount of money printing, and you have to worry about inflation with this. Yes, it's going to provide a great short-term stimulus, but I think a lot of the long-term investors are growing increasingly concerned about this large bar right here. Another thing that I think investors might be concerned about, and a lot of you may not even know about yet, is the fact that Janet Yellen said that she was considering taxing unrealized gains. And what this means is even if you haven't sold a stock yet and officially gained the money from it, they could still tax you just based on the increase of that stock within your portfolio. I've even heard that there have been talks about them potentially taxing every single trade you make, whether it be buying or selling a stock. There's rumors of them putting a tax on it. These two factors combined, I think, have been adding to this growing fear in investors. This fear is the most easily seen when you look at Google Trends. If you look at Google Trends and you type in market bubble, look at the amount of growth we've seen in the searches of market bubble. It hit an all-time high from January 24th to January 30th, just a couple of weeks ago. If you also go ahead and look at the related queries, you see things like, is the stock market in a bubble? What is a stock market bubble? People are becoming more and more educated on the fact that this stock market may be going up too high too quickly. Now, I'm not necessarily saying that the stock market is in a bubble right now. I'm actually fairly bullish on the market, but I'm just saying that people are aware of this, and it's growing to be something that investors are more and more scared about. Now, once again, anyone who follows our channel religiously knows that we post a lot of videos regarding SPAC mergers, and the SPAC merger bubble is something that is especially prevalent. That concern that there's too many SPACs going on and the valuation of those SPACs is just getting ridiculous. And you can see that this was demonstrated this morning by Lucid Motors' official SPAC deal. They valued them at $24 billion when it comes to the pro forma equity value, which is the largest SPAC deal to go through yet. When you compare this to other EV SPAC deals like Lordstown Motors, Fisker, XL Fleet, they all came in at around $2 to $4 billion. So when you look at something with a valuation of $24 billion that has yet to even produce a product or have any revenue from their cars, I think that's where the concern is coming from. Even after falling nearly 44% this morning, all the way down to $32, it still gave the merged company a market cap of $52 billion. In comparison, you have incredibly established companies like General Motors, as well as a very hyped company like NIO, valued at only around $75 billion. So this company that has yet to even produce a car is being valued at the same rate as a company like General Motors. I think that's where these bubble concerns grow even more validated, specifically when it comes to the EV SPACs. All of these concerns came out this morning in a massive market crash in which the Nasdaq dropped to right around 13,000. This was almost a 5% drop, and specifically we're seeing a huge sell-off in tech and growth stocks. So now comes the time in the video when I get to tell you my 3 stocks that I think are a great buy on this little market sale. You hear guys like Jeff Bezos talk about the fact that a company and its stock price are not necessarily connected at all times, and these are 3 companies that I think are way ahead of their stock price. But the first company that I think is at a huge discount is Space Mobile, and this is coming to the market in a merger with AST. This is a great time to invest in a company that has its costs falling. It has over 750 patents that are incredibly well protected, and its stock sold off around 15% today. So basically what Space Mobile does is provide broadband from outer space. And what this allows them to do is fill in the gap that your traditional broadband providers would have in their coverage. This is something that affects around 51% of people and around 5 billion phones. So there's a huge market for this. Another thing that I love about this stock is that a very well-known short seller in Citron Research even came out to say that they have a $50 price target on this stock, and that it's their favorite space stock on the market. Specifically, Citron says that this is largely due to the fact that their total addressable market is roughly $1 trillion. My second stock that I think is selling at a huge discount right now is Indie Semiconductors, and they work in 4 of the largest industries that you can possibly be investing in right now. That's the autonomous vehicle space, connectivity, user experience, which is stuff like Apple Play, as well as electrification. They make semiconductors for the inside of electric vehicles. This is a company with a $1 billion backlog right now, and really they're just struggling for cash, which this merger is going to give them. I have been genuinely confused why this company is still trading at such a low stock price, and I think eventually, when the awareness spreads about what exactly this company does, we're going to see a huge run. The company actually just had an update on its merger yesterday and said that they're still working through some of the details with some of the paperwork, but they expect their total addressable market to increase over 2 times from 16 billion all the way up to 38 billion in just the next 4 years. They also said that they're expecting to close on this merger in early spring of 2021. And the third company is a company that we have a whole bunch of videos about on the channel. Both of us really believe in it, and that's going to be Clover Health. In the simplest terms, Clover Health is providing healthcare at a lower cost. You can see that the average annual cost savings are around $400, and lifetime it's around $2,000, which is roughly 17% when compared to your average competitor, and even more when you compare this to Medicare. This would explain why more and more people are choosing Clover Health as their provider, and you can see that they rank the highest of these 10 companies when it comes to compound annual growth rate of members within the last 3 years. They're sitting at right around 27%. They currently sit at only 57,000 members, so there's plenty of room to grow. And you can also see that their revenue has been growing significantly recently with a compound annual growth rate of almost 40%, as well as their market share, which is now over 25%. Chamath has an even brighter outlook for this company and expects them to cover almost 300,000 members this year and around 600,000 by 2023. This growth is also reflected by these price targets. The lowest price target that's currently on this stock is by JP Morgan and Chase at $15. Even that would be a 50% increase. This stock is clearly being dragged down by the short report and the amount of investigations that it's under, but if it does clear those investigations, this stock is surely gonna fly. I hope you did go on to enjoy today's video, and if you did, make sure you leave a like down below. And if you want to invest in me for free, make sure you hit that subscribe button. It really helps us out, and I really appreciate it. But other than that, I'll see you in the next one.